You already know the odds are bad. Everyone does. 9 out of 10 people who trade like this lose. So here's the real question, the one nobody asks. Why is your thumb still opening the app? You told yourself, just a quick look. That was an hour ago. Let me tell you about a man named Richard, a Navy medic, San Diego. A wife, 3 kids, a mortgage, an ordinary, careful life. Before all this, he barely touched the stock market. He'd dabble once in a while, nothing serious, nothing that could hurt him. Then he downloaded one app, and within months, Richard had turned $15,000, borrowed on credit cards, into a bet the size of a house. This is not a story about a reckless gambler. It's a story about what the app did to a careful, ordinary man. And it was built to do it to you, too. Here's how it started. The app was clean, friendly, free, no commissions, tap to buy, tap to sell. And every single time a trade went through, the screen threw confetti, little bursts of celebration, emoji notifications lighting up his phone. It felt, in his own family's words, like a game. But it was not a game. Richard started with $15,000, pulled from cash advances on his credit cards. When that wasn't enough, he took out a home equity loan, $30,000. Then another, $30,000 more, borrowed against the very house his 3 kids were sleeping in. And it escalated the way these things always do. What began as a few dollars became his evening, then his every spare minute. Then the first thing he reached for waking up, and the last thing he saw at night. It stopped being something he did, it became something he was. And the app had a name for people like him, its favorite word: engaged. His wife said he'd have nightmares, that he'd stop eating during trading sessions, just staring at the screen for hours. And early in 2020, his account crossed $1 million. On paper, he had made it. He did not stop. He could not stop, because the app was never designed to let him. And before you tell yourself Richard was just weak, or greedy, or a fool, hold that thought. Because everything that happened to him was the app working exactly as intended. Every feature that pulled him back in was placed there on purpose by someone to do exactly that. Let me show you the machine. Start with the confetti. It rained down after trades for years. And here's the trick most people miss. It fired whether you made money or lost it. It was never a reward for winning. It was there to make the act of trading itself feel good. Win or lose, the app threw you a little party. And look closer at the screen itself. The numbers don't just sit there. They flash. They pulse green and red, ticking, moving, alive, even when nothing important is actually happening. A quiet price on a boring day is easy to ignore, but a number that blinks and jumps feels like an event, like something you have to respond to, right now, before it's gone. Then the free stock. Open the app and there's a gift waiting, but you have to scratch a card to see what you got. A scratch-off lottery ticket. The exact same thing sitting by the gas station register, now living inside your investment account, teaching your brain the exact same lesson. Scratch and maybe. Then the lists, the most popular names, what everyone else is buying right now, ranked so you feel the pull not to be left behind. Then the wait list, where tapping the screen every single day moved you up the line. A game just to get in, before you had invested a single cent. And then the buzzing. You put the phone down and it calls you back. A price moved. Something's happening. Come back. Each buzz a tiny tap on the shoulder, all day long. Now, none of these features help you invest better. Not one. Every single one is designed to do just one thing: keep you touching the glass. So why does it work? Why couldn't Richard stop? And why can't you? Here's the uncomfortable answer. The thing that hooks you isn't the win. It's the maybe. That half second before the number lands, maybe this time. That is the hook, not the money. The moment right before. That flicker of not knowing pulls on your brain harder than the money ever does. And the people who built the app understood that better than you understand yourself. Because it is the exact machinery of a slot machine: the lever, the spin, the little pause before the reels stop. A small reward, unpredictable, arriving just often enough that you reach for the lever again. And that's the secret. Not every time. If you won every time, you'd get bored. If you never won, you'd quit. It's the maybe, kept alive, that traps you. And every buzz, every flash of confetti, quietly feeds it. And there's an even nastier trick buried in here: the near miss. When you lose, the app doesn't just tell you that you lost. It shows you how close you came. The stock you almost bought that then jumped. The exit you almost took. That so close feeling doesn't push you away. It pulls you back harder than an actual win would. Slot machines are engineered around the near miss. So is this. So you are not chasing the profit anymore. You're chasing the maybe. Richard wasn't trading toward a goal. He was pulling a lever dressed up as a stock chart. And the market, the actual companies, the actual value of anything, had almost nothing to do with it. It never really does. Now maybe you're thinking, that's just Richard. Some people have addictive personalities. That would be comforting, wouldn't it? It would mean this can't happen to you. But somebody actually put that comfort to the test, and not who you'd expect. A financial regulator got suspicious, so they did something remarkable. They built their own trading app, a fake one from scratch, and ran more than 9,000 people through it. Controlled, measured, split into groups like a drug trial. The kind of experiment you cannot argue away with a story about willpower. One group got the little buzzing notifications, nudging them back in. Everything else identical. Same app, same market, same information. That one group traded 11% more, and they took 8% more risk from the notifications alone, just from being poked. Then the researchers added prizes, points, giveaways, the game layer. Trading jumped another 12%. Again, nothing about the market had changed. Not one company was worth more or less. The only thing that changed was the app poking people and dangling a prize. The nudge and the game did the rest. And here's the part that should make you angry. It worked on almost everyone, but it bit hardest into the people with the least experience, the newest, the youngest, the ones who could least afford to lose. The design doesn't hunt the experts. It hunts the beginner. It hunts the Richards. It was built to find them, and notifications were only one of 4 tricks the regulator tested. Flashing prices, leaderboards ranking you against other traders like a game, points and prize draws. Each one, on its own, pushed people to trade more and gamble harder. Now stack all 4 together, the way a real app does. And you don't get a coincidence. You get Richard. Which means it was never really about his character. Change the design, and the very same person behaves completely differently. And there were a lot of Richards. When regulators pulled the curtain back on this app, the scale was staggering. In one state alone, Massachusetts, nearly 500,000 people had accounts, holding over $1.5 billion, and their median age, 31 years old. Then regulators found this. One single customer, inexperienced by the state's own description, had placed more than 12,700 trades in just over 6 months. Do that math. That's a trade every few minutes the market was open for half a year straight. That is not investing. That is a man at a lever, unable to walk away. And he was allowed to, because the app had approved him for some of the riskiest trades on offer: options, leverage, the sharp tools. In that same state, 68% of the customers approved for options had little or no investing experience at all. The gate wasn't broken. The gate was open, on purpose. Zoom out, and the pattern holds. Nearly 10 million funded accounts. And by one analysis of 9 different brokerages, this app's users traded the riskiest products at the fastest pace of anyone. This was never a handful of addicts. This was the business model, working exactly as designed, running on millions of people at once. And the timing was no accident. This all crested in 2020. Millions of people suddenly stuck at home, suddenly bored out of their minds, many holding a stimulus check and a smartphone. The casinos were closed. Sports and sports betting had shut down. So the urge to bet went where it still could, into a free app that made buying a stock feel exactly like placing a wager. For a whole generation, their first taste of investing was a slot machine. Which raises the question you should always ask about money. If you're the one losing, who is winning? Follow the money, and it gets very clear very fast. The app is free. No commissions, ever. So ask yourself, how does a free app become worth tens of billions of dollars? Here's how. Every time you place a trade, the app sells that order, quietly, behind the scenes, to big trading firms who pay for the right to fill it. In plain terms, the app gets paid every single time you trade. Not when you win, not when you're right, simply when you trade. Your activity is the product. So change how you see it. You always assumed you were the customer. You're not. And when a product is free, you already know the rule. You've heard it about social media, and it's just as true here. If you're not paying, you're not the customer. You're the inventory. Your trades are the thing being sold. You walk in the door thinking you came to shop. You are what's on the shelf. Sit with what that means. The app makes money on your activity. You lose money on your activity. Those two arrows point in exactly opposite directions, and only one side of that deal designed the machine, wrote the rules, and placed every last piece of confetti. Guess which side that was? And it gets worse. Regulators found the app was hiding that this was its main source of money, while telling customers over and over that it was free. Worse still, it wasn't even getting you the best price on your trades. Those inferior prices cost customers $34 million, even after counting the savings from paying no commission. Now remember that little list, the most popular names, what everyone's buying right now. It feels like helpful information. It is actually the most dangerous feature of them all, because it takes millions of separate people and turns them into one herd, all stampeding toward the same stock at the same moment. And researchers measured exactly what happens next. The most bought stocks on the busiest days, the ones sitting at the very top of that list, went on to fall, on average, about 5% over the next 3 weeks. Read that again. The crowd rushes in, together, right as the thing is about to roll over and drop. You watched this happen live in early 2021, and you probably didn't see it for what it was. GameStop, a struggling mall video game store whose stock rocketed to nearly $500 a share. 6 million people piled into one online forum, egging each other on, screaming that it only goes up. The popular list glowing red hot. And then it broke. The stock lost more than 80% of its value from the peak. $27 billion. Gone. In a matter of days. The people who got in early and sold near the top did just fine. But the crowd who rushed in at $400, who saw it trending and couldn't resist, they were the exit. They were what the smart money quietly sold to. That is what the popular list is really for. Not to inform you. To gather you into a crowd at a peak at the exact worst possible moment. You feel like you're joining the winners. What's actually happening is you're being delivered on a schedule right to the people who need someone to sell to. You feel like a player. You're the product on the shelf. And Richard? He was in that crowd too. Of course he was. The app showed him what was hot, buzzed him the moment it moved, threw confetti when he chased it. He didn't pick those stocks in some quiet, careful moment of analysis. He was handed them, at the top, by the very same machine that got paid whether they rose or fell. The herd was never a bunch of strangers. The herd was him. So let's go back to Richard, because his story doesn't end at $1 million. It ends the way these stories almost always end. That account that crossed $1 million in early 2020? By the time the dust finally settled, it held $6,956. That's it. That's what was left. $15,000 in credit card debt. $60,000 borrowed against his family's home. The nightmares. A wife watching a man she loved stop eating, hunched over a phone that kept throwing him confetti. And all of it, every detail, documented, on the record, in the paper of record. This was a real man, not a cautionary invention. And Richard, at least, is still here to tell his story. Not everyone was. Behind these numbers are real people who did not walk away whole. Some who lost their savings, and some who lost far more than money. I'm not going to turn that into a scene. I'll just say it plainly and with respect. This was never a game. It was only ever dressed as one. Hold on to that. If all of this sounds like it should be against the rules, here's the thing. A lot of it was. And regulators eventually came for it. Not once, again and again and again. 3 different watchdogs, 3 different penalties, one after another. First, the market regulator. A $65 million penalty for hiding how it really made its money, and for those inferior prices. Then the industry watchdog, $70 million, the largest penalty that body had ever handed down in its history, for misleading customers and for approving people through automated bots for trades they had no business touching. Then a state came after it for $7.5 million more, aimed squarely at the game-like tricks. The confetti, the lists, the whole casino dressed up as an investing app. And that state went further than any of them. It moved to strip the app's license to operate in the state entirely, to pull the plug. And the confetti? One spring in 2021, it quietly disappeared, swept away in a single blog post before too many people were watching. But understand this, because it is the whole point of everything I've told you. Taking away the confetti did not take away the machine. Everything underneath it, the buzzing, the lists, the maybe, is still there, still running, still built to keep your thumb moving. But here's the part that should bother you most. Add those 3 penalties up. Call it $140 million. It sounds enormous. To a company that grew to be worth tens of billions, built on exactly these features, it's a parking ticket, a rounding error. And the math is cold. If the machine earns more from the tricks than the fines ever cost, then the fines aren't a punishment. They're a line item, a fee paid gladly for permission to keep the machine running. So what do you actually do? And I want to be honest with you here, because most of the advice on this is useless. The useless advice is, have more discipline, be stronger, just don't open it so much. If that worked, you'd have done it already. So would Richard. That advice fails every time, and here's why. You cannot out-discipline a machine that was designed by teams of very smart, very well-paid people whose entire job is to defeat your discipline. The willpower fight is the exact fight it was built to win. Every time you rely on willpower alone, you are playing its game, on its home field, by its rules. The one move it cannot survive is the boring one. You don't fight it, you remove it. First, turn off every notification, not some, all of them. That buzz is the string it pulls to reach into your day. Cut the string. Then add friction. Log out so opening it takes real effort. Move it off your home screen into a folder 3 taps deep. Make the machine hard to reach. And here's the strange part, the part nobody warns you about. When you do this, you will feel bored, a restlessness, a little itch, an emptiness like something's missing. Your thumb will actually reach for a phone that isn't buzzing anymore. That feeling is real, and it is uncomfortable, and it is the whole point. Do not fix it. Sit in it. Because that boredom is not a problem. That boredom is the machine running in reverse. It's the hook, with nothing on the end of it anymore, slowly letting go of you. Every hour you sit with it, it loses a little more of its grip. That empty, restless feeling you're so desperate to escape? That is the exact shape of you getting your life back. Let it be boring. And here's what nobody selling you excitement wants you to hear. The version of investing that actually builds wealth is unbearably boring. Buy a little, regularly, into something broad. Then do nothing. For years. There is no confetti in that. No buzz, no leaderboard, no maybe. Which is exactly why the app will never, ever nudge you toward it. Boring doesn't sell your order flow. Boring doesn't feed the machine. The app was never your tool. You were its. Or more precisely, your just one more, your maybe this time, that was the tool. Richard's and yours. But here's the good news, the thing the whole machine is terrified of. It only works while you keep pulling the lever. The moment you stop pulling, it has absolutely nothing. It needs you far more than you ever needed it. So close it. Feel the boredom, and know that the itch you're fighting is the most expensive thing they ever built, finally failing. But there is one last move the machine makes, the most profitable one of all. The moment it stops merely keeping you playing and quietly walks you to the front of the line to buy at the very top, right as you become the exit for someone smarter. How that trap is built, that's the story for next time.